for Commodities and Currencies Research. So what the thing is happening is that the currency market is a little bit on the weaker side for the rupee, as we have seen the rupee depreciating below 80 now and touching the levels of 80.05 at the lower levels against the dollar. So the rupee market has been on the volatile side and especially on the weakening side, which has led to the commodity prices getting into the volatility, as the dollar index has showed some good amount of strength. Although the last couple of days has been a little bit on the profit booking side for the dollar index, where the $109 dollar mark has been taking as a resistance point, and we have seen some correction from the $109 mark to 107.50, 107.25 odd zones. Going ahead, the commodity prices will be taking some reflection from the currency prices as well, but also the important factor remains about the Federal Reserve's policy statement and the outlook going ahead. It is hinted that there can be some amount of uh, uh, not little bit on the hawkish side. It can be on a neutral side to less amount of hawkish side. I won't say neutral side, but less amount of hawkish statement from the Federal Reserve, because some data recently have shown that the Federal Reserve might not be so much on the aggressive side on the interest rate hikes. So there is a rumor that there can be 1 hike onto the interest rate, but that looks a little bit on the unnecessarily side. I don't think so 1% hike will be there on the interest rate cycle, where we will see next week the Federal Reserve's policy meeting. But I think 50 basis point to 0.75 basis point cannot be ruled out on the interest rate cycle hike. So this will impact the commodity prices as well. Looking at the current situation, the gold prices have kind of taken into the consideration about the hike, about 50 basis point to 0.75 basis point hike. So it has already cashed in the hike about 0.75 basis point. But if in all the case scenario comes out that the Federal Reserve goes out with a very much on the hawkish side and increases the rate by 1%, then the gold prices will show a negative reaction to it. But in the case if there is no such thing like a percentage hike, then definitely the gold prices will react a little bit on the positive side. Now speaking about the levels for the gold prices, till the time 49,800 is holding on to the gold prices, the outlook remains onto the neutral side, as we have seen gold prices onto the MCX taking support near the 50,000 level mark, and on the higher side the gold prices are taking resistance at the levels of around 51,000 to 51,500. So it remains into the neutral territory as of now. The crude prices are showing some strong rebound after the Brent prices have touched the levels of $100 mark. Below $100 mark, they have started to take support from those levels, and again they have risen towards the 105 onto the Brent prices. So this is reacting a little bit on the negative side for the rupee, as the rupee touched the all-time low above below 80.05 odd mark. So this remains to be on the radar for the traders and investors, that how much fall the rupee keeps on showing onto the charts. Now moving on to the base metals part, the base metals are looking a little bit on the weaker side again after some amount of recovery that we have seen. But if the dollar index prices starts to rise again, the base metals will start to react negatively to it. So overall, on the base case scenario, the commodities market look a little bit on the volatile side to negative territory again this week, with respect to the dollar index prices and the Federal Reserve's interest rate hike, which is due next week. So this is about it from me, guys. Hope to catch you next week again soon. This is Jateen Trivedi signing off. Thank you.